Hey traders, Steven Quitzel here with TradersPlan.com. It's Friday, February the 15th. Hope everybody had a happy Valentine's Day. Got a lot to cover. Gonna look at the Nasdaq. I'm gonna look at some breadth, some miners. China's breaking out. I'm gonna talk a little bit about Bitcoin, even though that is normally not my cup of tea. But there's some interesting developments going on in the digital currency world. So just kind of want to talk about that a little bit today. So let's start with the Nasdaq. Now, I left these up here from last week just to kind of remind you that, when the market gets above really gets 4%, I'll say the Nasdaq above the 20-day moving average. Typically, that has historically shown some signs that, we need a pullback, and some are big pullbacks and some are just little teeny tiny pullbacks. But right now, if you don't have enough stock, I'm sure you have that fear of missing out mentality. So let's look at something. The Dow Jones and the S&P 500 have moved through their 200-day moving average. The Nasdaq is right at it. If we look at this, forget this as a Nasdaq and look at it as a stock. A stock stair steps its way higher, right? It goes up, it forms a little consolidation. Within the rally, goes up, forms another little consolidation, and it goes up. Typically, a lot of times, after you break that second consolidation, and then it'll pull back for a third time, that's a time for a deeper pullback. Now, I'm not saying that, we're going to come all the way down here or anything, but I'm just kind of saying don't let the fear of missing out get you. You should always make sure that you are invested. Especially when the market's rallying, have some stock. That way, if you think the market should be going down, but you're wrong, you still are making some money on the way up, right? But if you look right here, the Nasdaq, as I record this, is at 74.55, and the 200-day moving average is 74.65. So it's literally, 10 points under it. On Wednesday, you can see this little dark green candle here. It literally touched it within less than a point and then kind of reversed lower, came back, reversed yesterday on Thursday, and now is up. And the market is up Friday, and mostly the Dow Jones is up, the Russell 2000 is up, but the Nasdaq is really lagging a little bit. So it's something to keep our eye on. Now, I want to draw this just to kind of show you. I'll draw this horizontal line just to kind of put this price action right here, just to kind of remind you that we really, the price action before the market, the Nasdaq peaked in January of 2018, all of this whipsaw and chop, we're all the way back to where it was, okay? So just kind of keep that in mind that, it's sometimes if you don't own enough stock right here, I think it's okay. I think we all have to do what matches our personality, but the market really has not gone anywhere in about 13 months. We're at the same place that we were at 13 months ago. So, I think these shakeouts, even bear markets, are healthy because they allow the secular bull market trend to resume. But you just kind of have to understand where you're at in things. Now, I think right now that, even a pullback is reasonable to assume. It could just continue to go to the moon. I don't know. It sure seems like it does because the market just won't go down. I'd be more watching, for as far as the bigger picture goes, I'd be more watching this 50-day moving average. You can use the green line. You can say, okay, that's a 20-day moving average. That's really the rally line, the sharp rally line. But, I would say the 50-day moving average is more of a intermediate uptrend line, right? If it's above it, the market is in an uptrend. If the market is above the green line, the 20-day moving average, the market is rallying. So, we look at these two. The market doesn't always rally, but a lot of times it is in an uptrend, or at least the Nasdaq is, over the last 20 years, about 40% of the time. Maybe a little bit less than that. So, right now, as far as me goes, I own some stock, but, I just think that you're going to be better off really buying the pullbacks. Even if you think this rally is going to continue, I think you're going to be better off letting the market come to you for a couple of days than to, try to just get the fear of missing out. Everything's going to take off without me. and buying up here. Not to say that if you buy right here, you could make money, but over time, and I mean over a history, a period of years, I don't think that's the best strategy. I think over time that you could struggle a little bit. So we're really just gonna, make sure the last 2 days, Wednesday and Thursday, the final 20 to 30 minutes, the market really kind of sold off a little bit. So I'm going to keep an eye on that, see if that happens again. The market has been strong for the last week or so, and but the last 20 minutes of Wednesday and Thursday, it really kind of sold off. So we're going to keep an eye on that. But the S&P 500 looks really good. Let's kind of look at that. It is above the long-term moving average, but again, if I kind of go back a little bit further, let me just kind of go back and kind of draw this kind of inspect button. The S&P 500 isn't even back to its January 2018 peak, so that was 13 months ago. It's still 4%. I'm just ballparking it under that. So just kind of keep in mind that it's still got a ways to go, and this bear market that we've had, it could take a little bit of time, or we could just kind of V-shape it out of here. I kind of doubt it's a straight V-shape, but it could. So just obviously anything can happen. You have to have rules in place to, like, okay, if the market continues to go up and I'm wrong, I'm going to continue to trend follow, right? I will have some stocks in place, but I need to be prepared, historically looking at things. I need to be prepared if the market does start to crack, then I'm going to, take cautious measures, okay? So right now the Nasdaq and S&P 500 is looking good. Let's kind of look and see what the Nasdaq is doing. It's kind of been chopping around range bound, but I don't care what it does at the beginning of the day or even the middle of the day. I want to see what it does in the final hour. Now the Russell 2000 is, boy, that's strong. The Dow Jones is up a lot. A lot has to do with some of the finances, JP Morgan and Goldman Sachs, and we're going to talk about some of these big cap movers here in a second. Let's look at the sector summary first. Okay, so these are all the sectors, all 10 sectors. There's a 10th one now with communication services. So you have all these sectors, and they're really mixed bag. You have materials that has been the laggard, financials, which has been the laggard, and I'm looking at the last 20 trading days, and really that's about a month, 20 to 21 trading days. That's about a month's worth of trading. So we're going back a little bit. But you can see financials are the laggard, probably has to do with kind of the lowering yield. The yields have been going down, and that inversely helped real estate. So real estate REITs, a more typically defensive play, as a leader, but so is technology and industrial. So I always like to say, okay, where's money been flowing into the last 1 month? So you can see discretionary, has been okay. But a lot of these, you have some more aggressive towards the top. Now, if I go back, and this is through yesterday, and see what has really started to come back in the last 5 days, you have energy, and energy, really looked like it was going to roll over, and then OPEC came out and they cut production, and then it just completely reversed the other way. So industrial, materials, energy, healthcare. You have utilities and staples, the more defensive sectors that have lagged the last 5 trading days. I would consider that definitely a positive. Those are the ones you want to lag, okay? You want these to lag, and you really want the technology and the discretionary to lead. And 5 days really isn't kind of a make it or break it, but I think this is positive sign, and I think right now we're seeing more positive signs of the overall market to get out of this bear market, but you really do have to take it day by day. So if we look at, let's look at the short-term breadth right here I like to look at the short-term breadth, and then I like to look at the long-term breadth. So you can see that 83% of stocks in the S&P 500 are above the 20-day EMA. That's bullish. There's nothing wrong there. You can see financials have been lagging a little bit. So I'm looking at all these. XLK, this is technology, continues this bullish trend. Discretionary 80%, industrial 95%. So a lot of strength coming out of industrial. We might come back and investigate. You can see energy was looking like it was ready to roll over and then just surged right back up for a head fake. Utilities are still up here though, and you know, it's just, that's just kind of what interests me. Is if you look at this right here, you can see the utilities really sold off when I think they should have been rising when the market was selling off. Utilities were strong and then they just absolutely sold off. Probably has to do with the yields, but my point is you have a conservative sector that's supposed to hold up and did not, when typically a conservative investor needs it the most, and that's during a bear market. Utilities did not hold up, but they are still showing strength. So I would really say there's nothing right now that is not showing strength, but financials are definitely the laggard, and I do believe that has to do with the yields, which we can look at as well. So that is the short-term breadth. Let's look at the long-term breadth real quick, which is also showing a positive improvement right here. You have 64% of stocks above the 64% of the S&P 500 that is above the 200-day moving average. Also positive. You know, you just got to kind of keep in mind when the market goes straight up, sometimes you get that euphoric feeling, you know, that it's just going to go up and up and up. So just keep in mind and look at the chart and say, okay, you know, a lot of times when I look at the market, I'm like, okay, what are the expectations from this point as of today? Are the odds that it could pull back? Could the trend continue? The answer is yes, but are the odds that it will likely pull back and provide a better opportunity than just continuing to go straight up? And that's kind of where I think we're at right now as far as, you know, risk reward. I think that the market could pull back a few days if this uptrend is just going to keep going up and up and up, and that's probably a better entry. So right now though, breadth is positive on the long term and the short term. So the technical picture is getting better, and it's important to note that, you know, a lot of times, and I just got an email from somebody like, hey, you know, the market continues to go up and up and up, but it's important that to keep in mind that there were very, very strong rallies in 2008, 2000 to 2003 that sucked everybody in, and then they just blew up. Now, I'm not saying this is going to happen. You don't know which one it is, but my point is not to try to chase a rally. You know, take risk measures in your trades to make sure that you are sticking with your trade plan, whatever that is. We all have to do what's comfortable for ourselves. You have a trade plan. You stick to that, whatever it is, because we're all a little bit different. So what is interesting to me, and I want to look at China, for example, and China is definitely a chart worth looking at. This is the Shanghai Exchange. I would say that is a trend change all day. What we're looking for right here, so this is the Shanghai Exchange. This goes all the way back to this March of 2014. So you had a major trend line that broke, you know, support right here, broke right here. It's kind of eating its way through, but this completely cleared this pivot right here. And if I go to kind of I don't even have to go to a shorter chart. I can just really draw a trend line right here. I mean, that broke. If I want to draw another one, I would say that broke right there. So right now, the Shanghai Exchange, look at some of these moves. They can be very, very long, and they can move very, very fast. And right now, the technical picture in the Chinese market is getting a lot better. And it's been down really. When the market peaked in January 2018, it never recovered like the U.S. market. So it sold off a lot longer. And you can see that even if we kind of put some numbers to it and say, okay, how far down did this thing really go? You know, 32%, that's definitely more than the U.S. market, and it's been going down for longer. So, you know, you could definitely have some upside momentum if you're looking at some of these emerging markets, just because now they're starting to lead out of this. So let me delete those. Save changes now. So when you're looking for leadership change, actually I want to go back to edit this for a second. This is the Shanghai versus the S&P 500 relative ratio chart. So I am looking, when you're looking for the leadership change, this is a very long-term downtrend, right? And you can see right here, right where both of these cross, you can see that for really the last 6 months, the Shanghai has really performed in line with the S&P 500. But if it were to break out above this, I would take that breakout very, very seriously, for the simple reason it's breaking out of a downtrend relative chart, and it's breaking out of a first stage rectangle relative chart. So if it breaks out of here, we have new leadership. And the reason when a trend line has been touched multiple times is, I think this has multiple times, and then it breaks out of multiple places. And this goes all the way back to mid-2015. So we're looking at not quite a 4-year chart, probably, a little bit more than 3.5 years. I would take it very, very seriously. So I am steady waiting on this. This could take a little bit more time to develop, but the fact that you have, and what this means right here, if this line goes up, this means that the Shanghai is outperforming the S&P 500, and if it goes down, it means the Shanghai is underperforming the S&P 500. Doesn't mean it's going down and the S&P 500 is going up. It just means that it is underperforming the S&P 500. And as you can see, it's been doing that for a very, very long time. And we are getting close to a pivot point. And I would say, based on the fact that the Shanghai has broken this level, I think that's pretty important. So let's save this. And while I'm doing that, I want to look, if I were to throw a 200-day moving average on it, let's kind of throw a 200-day moving average on this, just see what it looks like. You can see that it is still under it, but it is very close to it, 2781, 26. So it's probably about 2 to 3% under this 200-day moving average, and you can see that it had a long ways to crawl back because it fell so sharp, right? So steep, and now it's kind of coming back. So just keep that in mind, that it's very close, and the technical picture is looking a lot better. Now, if I were to go to the gold chart, kind of close some of these out. So gold has really created an interesting bull flag, and we're going to look at the dollar, but it kind of continues to, the GLD looked like it was going to kind of break a little bit and then found its footing. You have a really, really nice bull flag in the GDX, and now it's trying to break out. I would say it's definitely still in the channel, but this is such a strong thrust, right? This right here is a very strong thrust of the GDX, the gold miners. It's not like this where you have just a few really, really strong days in a consolidation. This broke some key technical levels. Gold is performing with it, and it just went boom, 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 came back, found support, and then 7 days straight up. That is classic textbook. I am looking for, maybe a breakout of this flag to continue. We'll just kind of keep an eye on that. The miners are still outperforming the metal. This is a relative ratio chart where you can see the miners have been underperforming the last few weeks, but for the most part, it is still in a rising, is going up for sure. So again, that's bullish. Now, the thing that's kind of got me scratching my head is the dollar. So the dollar is, it created this little double bottom, and I could totally redraw this chart right here, where this, because you can see it broke down, and that's kind of when gold started getting strong, but then it found support, right? It created a little double bottom, and then it broke out of this pivot, and now is heading back higher. So really, you have gold and the dollar, which normally have an inverse relationship. They seem to be moving together. So the relationship doesn't seem to be holding true right now. But based on this thrust, I still think you have to keep an eye on gold, even if the dollar goes up. I think you want to look for opportunities in gold based on this bounce off support and bull flag. So go check out your gold miners. There's some good ones out there. So, we talked about the S&P 500 and still not being back to its January 2018 high. It's still below where it was 13 months ago, but sometimes I like to look at over the last 12 months, right? Over the last 12 months, I want to compare the SPY, the S&P 500, the VEU, which is the All World ex-US ETF, and Bill, right, which is T-bill. So what has done the best? So because a lot of times it's a momentum style of strategy, but just kind of looking right here, you can see that the SPY in the last 12 months since the end of February of last year is up 3%. So a lot of chop, and it's really only up 3% in the last 12 months. The VEU is down 9%, and the bill is up 1.85%. This is dividends included on everything. So really, you only have the S&P 500 is about 1.5% above T-bills over the last 12 months. Not great, but again, we're trying to come back, and really the S&P 500 is trying to break this neckline. Might need to pull back a little bit and then thrust forward. But right now, the S&P 500 is starting to take that leadership again. So this has been a major thrust to the upside. So we'll just kind of see what happens. So let's look at, I want to look at, now normally I'm not a Bitcoin cryptocurrency. I've never really traded them. Just because I saw what happened in late 2017. I remember doing a webinar about it, kind of comparing the rise of, Bitcoin to 20,000 versus the rise to gold in the late 70s and what happened thereafter. But I have an open mind. So yesterday was very interesting news that JP Morgan came out, and they are creating, the first digital US-based digital currency. I would have thought that Bitcoin and everything would have been up a lot today, just kind of as a catalyst type. It really wasn't. But if you're looking at the Grayscale Bitcoin Trust, this is not an ETF, this is a trust, but it trades like an ETF. I always look for personality changes, like what is it doing differently from a price action standpoint, and then I start to pay attention. So this GBTC has been going down for a long, long time. And now it's starting to create this first stage bottoming pattern, okay? And it hasn't looked like that in a long time. And even if I go back 2 years, let's just kind of try to compare it a little bit, because you can see what happened in late December of 2017. It just channeled down, looking ugly, no real consolidation to speak of. Now all of a sudden it's looking different. So the momentum has 100% slowed to the downside, and really since November of last year, December, is starting to trade in a box. So if we want, if we're just looking at this, I kind of drew a pivot here. You can see that it's finding support. Let me go back to the 1 year chart. I just really wanted to visualize that. It's finding support around the 380 area. I think right here it was in the high 170s. 376, 396, 384, but my point is it's in a trading range now. And it hasn't done this since the bubble popped in December of 2017. I wasn't trading it. I don't know if you were, if you got burned, I don't know. But my point is that the personality is starting to change, so I'm trying to be open. There are a lot of things that could change, cryptocurrencies, at least on the US market this year. One, I think, just happened with JP Morgan, that used to call Bitcoin a fraud, is now creating their own cryptocurrencies. That's very interesting, and I think a lot of these banks, these big banks, could follow suit, right? Because it's just what happens once you can look over the last 30, 40 years, once one big Wall Street bank does one thing, if it seems like a smart move and profitable, they're all going to do it, right? So you got the JPM coin. I think that's what the new coin is going to be. Just because they move trillions of dollars, so they want an easy way and a faster way to settle funds. So they're creating this JPM. So at the same time, you have this Bitcoin trust that is looking like it's bottoming, and then you have the actual price of Bitcoin itself. I hope you haven't been sitting through this whole downtrend, but I'm trying to compare it and see what it has done differently. You can see that what it's doing right now looks similar to right here. But, you know, if I think that if this cocks back right here and breaks this 446 pivot, I'm very intrigued by the potential to break out of this and go the other way, especially with the fact that JP Morgan just provided a catalyst for why cryptocurrencies could go mainstream in the US now. And you have I believe it's the Chicago, the CBOE is, I believe it's the CBOE, don't quote me on this, but is looking to get approval from the SEC for the first cryptocurrency ETF. Again, this is a trust right here, this isn't an ETF, so there could be some catalyst moves that turns this ship. So I'm just trying to keep my eyes open for opportunities. I'm an opportunity seeker. So if I talk about that, then I'm going to drag this over and I'm going to look at overstock.com, which is, you know, has been in a downtrend for a long time. Now this is consolidating above the 50-day moving average. You can see it's been an ugly, ugly downtrend. And even if I add a year to this chart, you know, it peaked with cryptocurrency in the end of 2017. Now this is bottoming, it's kind of broken out of this stage and is in a trading in a box, but look at all this volume around here. So it's looking really interesting, and I think that there is some evidence to signs. I'm not telling you to go out and buy the stock Riot or, you know, any of those ones. I'm just trying to show you, you know, what I'm seeing on the chart, and you can make up your own mind. But there's a lot of volume coming into this, and it's trading in a box right now, and it's already come way off the lows. And as you can see, these suckers can move, and they can move quickly. And if you couple that with JP Morgan news, if you couple that with, you know, the Bitcoin trust is looking like it's putting in a bottom, you could be very early in a move. Now, if we go back to the Bitcoin chart, this could base for years. Like when you get into a first stage rectangular base, you don't know how long that's going to happen. So you just kind of got to pick a pivot, and you can see right here, let me get this these crosshairs off. You can see right here, I picked a pivot and say, okay, I think that if it thrusts it off the bottom, pulls back, and then comes back and breaks this 446 pivot, obviously there's some overhead, but that could be the turning point. But we just don't know. So looking very interesting. Now, I'm going to kind of pull up some other interesting charts that I think are looking very interesting to me. And one of them here, let me drag this over here. We'll just look at a couple charts. One of them is AMD, Advanced Micro Devices. You can see right here that, you know, it broke out of a downtrend, gapped up on earnings, so you don't have to worry about earnings, pulled back, and is looking like it's ready to really move higher. So this is looking like a very, very bullish pattern right here. I think, and I look at this chart and I say, okay, this looked a lot like Coop before it did. So let's go back to that. Look at Coop right here. It broke out and then kind of pulled back, and AMD is right here, and then it just made a monster move. And obviously this is a stronger stock than AMD, but my point is AMD is really setting up to look like that. Now, Carvana is something I noticed the other day, and you have this major volume spike, because I always comb the volume spikes, and you have this volume spike right around the potential support. It got rejected the following day, but now is breaking back through that 50-day moving average. So I would like to see some volume step into this, but I'm showing you this because this is a fast-moving stock, and if this does break out, right, and you could say it already did, but let's just say it's right there on the trend line. I would say I could draw another trend line right here that would be steeper. But I mean, if this breaks out after touching support several times, I would say that's incredibly bullish, especially after this major volume stepping in. Someone stepping in to support this around the $29 to $30 area, and now it's coming back. And anytime I see a failure breakout and then it comes right back to take it out, that to me is incredibly bullish and could mean more upside, more room to the upside ahead. So that's really all I have for us today. Wanted to just really touch base on the market and just put things in a perspective to show you where we're at. And kind of as I'm right here, the Nasdaq, that's coming back a little bit, but we still have a couple hours to go, so we'll keep an eye on that. Still a very strong day in the Russell, still a very strong day in the Dow. We'll see where the market finishes, but I think it's important to know where we're at in the rally. And no matter what, if you decide to put money to work now, or if you decide to wait to see if we can get a couple days pullback, just stick to your trade plan, whatever suits you. And to just kind of keep in mind that China is starting to really turn the corner, and that can be a really fast mover. And the cryptocurrencies with JP Morgan's announcement, it could really make for an interesting, in my opinion, second half of 2019, especially if that application goes through the SEC for the first cryptocurrency or Bitcoin ETF. So I hope everybody has a wonderful weekend. I hope everybody had a wonderful Valentine's Day, and we'll talk soon.